So you're looking to invest in real estate out of state. Where do you start? What questions do you ask? What areas should you consider? These are all questions that we're going to answer in today's video. I often have people reaching out to me on my channel talking about investing out of state, and they're asking these questions. And the reason people typically want to invest out of state is because it's expensive to invest in their local markets, and therefore they want to consider more affordable markets. So if you're in a state, say like California, where I'm located here in Southern California, it's very, very expensive to invest in real estate here. Whereas I could take that same money, go out of state, and sometimes buy not only one, maybe two properties with that same money that I was going to invest here in California. So the first thing you have to decide as an investor before you ever consider investing out of state is, are you investing for cash flow or are you investing for appreciation? And the reason I bring this up is because it's often very, very difficult to get both. If you're investing in states like California, you're going to get appreciation over the long haul. I believe the long-term appreciation here in the state of California over the last 65 years is somewhere around 5 to 6% on average. But at the same time, it's going to cost you 2 to 3 times the amount it would cost you to invest in a property out of state, because most investment properties are going to require somewhere between 20 and 25% down. So say, for example, you have $50,000 to invest. That means you need to be looking at real estate priced somewhere around the $200,000 level. And here in Southern California, where I'm located, you can't find a property anywhere close to that amount. In fact, you would have to double, even triple the price to find a comparable piece of property. So if I'm looking at a $600,000 investment here in California and I need to put 25% down, I'm looking at $150,000. Whereas if I can find a property out of state for, say, $200,000, then I'm only looking at around $50,000 to invest in real estate. So with that said, if you're looking at investing in appreciation, you're going to need to have more money to put down, because the states that appreciate the most are also the states with the highest barrier to entry with regards to down payment. Whereas if you're looking at investing in cash flow, then there's a lot of opportunities across the United States where you can put 20 to 25% down and where you'll create some cash flow because the rent is actually going to be more than your mortgage payment. So before you make that leap and say, yeah, I'm an out-of-state investor, just make sure you know what type of investor you want to be so that you don't get caught buying a property that doesn't appreciate when in fact you're investing for appreciation. So with that said, let's talk about some things that you're going to look for when you're investing out of state, what I would look for as a real estate agent and investor, and also some pros and cons of investing in out-of-state real estate so that you can decide if that's the right path for you. But before we do that, I want to take a minute and ask a favor. If you find any value in my videos at all, do me a favor and hit that thumbs up. It not only helps the YouTube algorithm push the video out in front of more people that are interested in things like real estate investing, but it also helps me accomplish my goal of educating buyers, sellers, and investors in this crazy real estate world. So why would someone consider investing in out-of-state real estate? Well, as I said earlier, it's typically because the real estate around you has become way too expensive. In fact, I have clients that currently rent property here in California because it's too expensive for them to buy here. And instead of moving to another area, which they could do, they've decided to rent here and actually invest in out-of-state rentals because they get the benefits of living where they want to live, but they also get the benefits of owning real estate. So a lot of people are considering out-of-state investments primarily because of that barrier to entry. It's a lot less expensive to buy real estate out of state than, say, states like here in California and even states like, say, New York. In addition to that, many people that are investing in states like California need to put way more down than the required down payment of, say, 20 to 25% in many of these areas just to get that property to cash flow, because many of the properties out here are excessively priced compared to the rents that they're getting. So many people consider out-of-state investing because it's a lot easier to create that positive cash flow. In addition, some of those markets can look attractive because it's growing, because there's, job growth happening in those areas. There's businesses moving to those locations, which is creating demand, which is driving employment to those areas, and therefore it's creating demand in those markets. And so if you can be one of those buyers that invest in a market prior to, say, the boom, if you will, around job growth and employment growth and all of those different things, then you can make out very, very well in the long run, because many of those markets will see noticeable appreciation because of the growth happening with new businesses, restaurants, all of the things that happen in a market when it's up and coming. So some of the pros in investing in out-of-state real estate is that it requires less money down, less money up front to actually invest in the real estate there. You usually get higher cash flow in those markets, especially based off the amount of money that you have to put down. So your cash on cash return is much greater. But one of the downsides about investing in out-of-state real estate is that many of these markets don't appreciate, say, like California. There are markets out there that haven't appreciated really at all in, say, the last 20 years. Now, the last 2 years of coming out of the pandemic, a lot of these markets that hadn't seen appreciation in a very long time did see some appreciation because of a change in job, being able to work from home, all of these different things. But those aren't things that you can typically count on when trying to invest out of state. So just understand that if you're trying to invest in rental property that's going to appreciate, then you need to go to historically where properties have appreciated versus going out of state and expecting the real estate there to appreciate like it would in, say, a state like California or New York, because it's not realistic. But with that said, you're likely to get the cash flow in those markets for a lot less money up front. Now, if you're someone looking to invest in real estate, but you don't even own a piece of real estate yet, you're not sure how that process actually works, I actually created a first-time home buyer course to guide you through the entire home buying process from A to Z. By taking this course, you'll be an expert at the end of the day, regardless of whether you're investing in a property for yourself or investing in real estate. So do me a favor, if you're interested, check the link below. So what do you look for if you're considering investing in out-of-state real estate? Where do you start? What states should you consider? Well, there are a couple of places that you can start. You can start with local investment clubs around where you live. There's different meetup groups where you can find, people that invest in out-of-state real estate. But what I would do personally is try to find a real estate agent, either local to you or someone that has been recommended to you by someone that you trust that knows people that invest in other markets, because they can usually be a really good resource for you. Now, I'm not here to toot my own horn or promote myself, but I'm one of those agents that if people reached out to me, I know what markets are hot. Why do I know this? Because I network a lot with top agents across the country. I often have clients coming to me looking to invest in other markets. So I'm trying to find which markets are booming, which areas are doing the best, so that I can help my clients invest their money, right? Refer them to the right people. And oftentimes agents like myself, we're also looking to invest in other markets as well, out of state. So we're constantly looking at different opportunities out there. Some of the places that I've been looking over the last year or so are Arkansas, Indiana. And that's not to say those are the only two. Those are just the two that I'm personally looking at myself. And the reason I'm looking at those markets is because the prices of the properties are reasonable. And with 25% down in those markets, they're going to cash flow. Now, some markets are going to cash flow a little bit better than others. But another thing I look for when investing in out-of-state real estate is something that I mentioned earlier, and that's job growth. How many jobs are coming to the city? Why are people moving there? Are big organizations, are big companies moving their headquarters to areas? Are there colleges around? Is the population continuing to grow? Because all of these things are a positive thing for real estate, especially when you have new things being set up like hospitals. Well, guess what? Hospitals bring in doctors. Doctors typically make a decent amount of money, and that typically means they're moving to more affluent areas. So if you see this type of growth happening in an area, then that could mean it's a good place to invest in. So with that said, you need to find a good agent locally, like I mentioned earlier, that understands investment properties, that deals with a lot of people coming into that area looking to invest in real estate. Someone that knows which areas are good, which areas are bad, which school districts people actually want to live in, where the locals want want their kids to go to school, because this is important. Because if you find rental property in an area where the schools are bad and no one wants to be for whatever reason, then that's usually going to mean lower rents. Whereas if you can buy in an area where the schools are 9s out of 10s, there's always people jockeying to try to get into that district. If you can buy a rental property in those markets, then that's usually a good sign when trying to invest in real estate. On top of that, finding a good local real estate agent can also give you an idea of what properties are going to rent for in that market, what property management companies are going to charge you, so that you can really get a bottom line on how much cash flow you'll be creating by buying a property in that market. And oftentimes, a good real estate agent, a great real estate agent, will not only be able to tell you all of this information, but they'll be able to refer you to those people, so that if you do decide to buy a property in that market, you already have all of those tradespeople set up. People like handymen that can fix things, when you first buy the property, or painters or flooring people, or a roofer if the property needs a new roof, or a property management company to get that property rented as soon as you buy it. So with all of that said, investing in out-of-state real estate sounds like a really, really good thing compared to investing in a higher price market. But also understand, investing out of state can have its downsides as well, outside of the appreciation that I mentioned earlier, less appreciation. Owning property out of state requires, if something major goes wrong, you having to go there and deal with it, you not really knowing the area. There's definitely downsides to it as well. So I don't want to make this video seem like investing in out-of-state real estate is all positives. So just make sure you're doing your homework up front, you're researching the area, you're researching the agent, just so you don't have any surprises at the end of the day. But if you're just getting into real estate investing, not sure where to start, whether out-of-state is right for you or not, you just want to know where to start with regards to investing, do me a favor and check out this video here.